Imagine your alarm goes off at 5 in the morning. You have a 12-hour shift starting in 40 minutes. You get in your car, turn the key, and nothing happens. Not a dead battery, not a mechanical failure. The car is in perfect condition. It just will not start. Because somewhere in a call center, a lender decided last night that your payment was 3 days late. And buried inside your dashboard is a small device that gave them the power to make that call without a court order, without a repossession agent, and without telling you it was coming. This is not a hypothetical. This is happening right now to an estimated 2 million Americans, a figure reported by the New York Times that has circulated through a decade of coverage, with no federal agency able to give a more current count, because nobody is required to track it. Today, we are pulling back the curtain on the technology that is already doing what the 2026 kill switch mandate is only being proposed to do, and what it tells us about exactly where this is all heading. The starter interrupt device has been around since the early 2000s. It is a small module, roughly the size of a deck of cards, wired directly into the ignition circuit of a vehicle. It communicates via GPS and cellular signal with a lender's software platform. When a payment is made on time, the system sends a daily code that keeps the ignition enabled. When a payment is missed, the lender logs into a dashboard, clicks a button, and the next time the borrower tries to start their car, it does not start. No judge, no sheriff, no repo truck, just a mouse click from someone who has never met you, does not know your circumstances, and is operating on nothing more than a flag in a database. The companies supplying this hardware read like a quiet industry you were never supposed to know existed. Pastime, Spirion, Paylink. These are not household names. They are business-to-business suppliers selling directly to dealerships and subprime lenders, embedded into loan agreements through fine print that most buyers never read and most dealers never volunteer to explain. In most states, there is no legal requirement to disclose that a starter interrupt device has been installed in the vehicle you are purchasing. You find out when the car does not start. And here is what the lender knew that the borrower did not. These devices do not just prevent starting on command. Many models are programmed to emit escalating warning beeps inside the cabin in the days leading up to a payment deadline, including while the vehicle is being driven. Your car begins audibly pressuring you to pay before the due date even arrives. The Consumer Financial Protection Bureau specifically called out lenders in its October 2024 Supervisory Highlights report for, quote, unfairly engaging devices that interfered with driving, referring to these in-cabin warning functions that distract and alarm drivers while in motion. The demographics of who carries these devices are not random. Starter interrupt systems are deployed almost exclusively on subprime borrowers, buyers with credit scores typically classified below 640. Often first-time buyers, often low-income workers in rural areas where a non-starting vehicle does not mean calling a rideshare. It means missing work, missing a medical appointment, missing a child's school pickup. The CFPB has documented cases of vehicles being disabled due to wrongful repossession orders, situations where the borrower had already made their payment or received a loan deferment, but the lender's service provider failed to cancel the disable command in time. The car got shut down anyway. The payment had already cleared. But the wrongful disable is not even the most consequential failure mode. The most consequential failure mode is that this system is profitable enough that no one with the power to regulate it has meaningfully done so. Repossessing a vehicle the traditional way costs a lender between $300 and over $1,000, when you factor in the tow truck, the storage lot, the paperwork, and the confrontation risk. A starter interrupt device reduces that cost to essentially zero. The lender does not need to find the vehicle. It does not need to send anyone. It does not need to navigate a borrower who is home and angry. They log in, they click, and they wait for the phone call from someone stranded in a parking lot asking what happened to their car. At that point, the leverage shifts entirely to the lender, who can offer to re-enable the vehicle in exchange for a late fee, an extension payment, or a new payment arrangement that resets the clock in the lender's favor. Consumer advocates have a word for this. They call it digital coercion. The lenders call it risk management. The federal government has noticed. The CFPB fined a subprime auto servicer called USASF Servicing $42 million in 2024 specifically for violations related to starter interrupt device misuse, including failing to provide adequate disclosures and using the devices to harass borrowers. A $42 million fine for a practice that is still legal in most of the country, for a technology that is still installed in an estimated 2 million vehicles right now. Now here is why every person watching this, not just subprime borrowers, should pay close attention to what happens next. The 2026 impaired driving mandate requires every new passenger vehicle to be equipped with technology that can passively monitor the driver and prevent or limit motor vehicle operation if impaired is detected. The engineering required to fulfill that mandate, the cellular modem, the remote software connection, the ability to prevent the drivetrain from operating from outside the vehicle, is functionally identical to what Pastime and Spirion have been selling to subprime lenders for 20 years. The only difference is scale. Right now, the Repo switch targets an estimated 2 million financially vulnerable Americans. The mandate installs the same architecture in every new vehicle sold in the country, regardless of your credit score, your income, or whether you have ever missed a payment in your life. The infrastructure does not care why it was built. It only cares that it exists. What started as a tool to manage default risk on high-risk loans is about to become standard equipment on a $90,000 truck purchased by someone with perfect credit and a spotless driving record. The same lender dashboard that disabled a single mother's car at 5 in the morning because of a processing error will share a design philosophy with the system that governs every new vehicle in America. The same false positive risk that flags a tired driver as impaired will have the power to strand them on a highway instead of a parking lot. We covered the mandate in detail in the last video. This video is about understanding that the kill switch is not a future threat being proposed by regulators. It is a present reality being operated by lenders on millions of vehicles right now. The 2026 mandate does, because the moment that hardware is in your vehicle, the question of who actually controls it stops being philosophical. If this breakdown opened your eyes, hit subscribe. Every week, we document the systems that are quietly rewriting the terms of ownership in America. The next one is already being built.